fear of a global recession.
Getting the respect we deserve now, and I think you're going to see historic deals.
I think it's going to work out really very well.
But while Trump's pause had quelled the markets yesterday,
is already unfolding up on Wall Street. Right now, the Dow is down about 900 points.
The one question that everyone is asking themselves right now is, what the heck do I do with my investments? Even Wall Street doesn't know what to do anymore. And well, this is all because China's not messing around anymore. We're watching them drop their gloves and go all in, financially, politically, and strategically. The stock market is not turning a blind eye to it either. This past week has been a total roller coaster. Wild swings, unpredictable drops, and moments where even the most seasoned investors are probably questioning their life choices. And all of this started with tariffs. What looked like just another Donald Trump headline turned out to be a pretty big ordeal.
Incredible numbers here. Comes just hours after President Trump announced a 90-day pause on tariffs for many countries, putting them all at 10% tariffs. Those, he said, who have not retaliated in any way, shape, or form.
So today, we're digging into what's really going on in this US-China standoff. But before we do, if you could please give this video a thumbs up and click that subscribe button, it would really help me out tremendously. Thank you. Okay, so even though we're not in the US, these tariff disputes matter to all of us. What happens between these two very large economic giants doesn't stay between them. It echoes across the global economy. This means all of our markets, all of our supply chains, and all of our costs of living. Now, let's back it up for a second. When Trump first slapped on that 10% tariff on Chinese goods, China's response was kind of what you'd expect: strong dissatisfaction. But when Trump turned up the heat and hiked the tariffs by another 34%, that tone kind of shifted. China suddenly wasn't just dissatisfied, they were firmly opposed, which sounds like a minor word change, but in Chinese diplomatic language, that's a full-on alarm bell. That's not just, we don't like this, that's, we won't tolerate this. And the fact that they even mentioned resolving things through fair negotiations at the end of that message, that was them basically saying, we're still open to talk, but we're not bluffing. But then,
Hundreds of billions of dollars a year they'd make on us on trade. I have great respect for China, but they can't do this.
Trump threatens to crank up tariffs by another 50%. And so after that, China was done playing nice. This time, they're calling it extortion. Yeah, that's what the Chinese government called it, directly in public.
中方必将奉陪到底。
Now, I don't care what side of the political spectrum anyone's on. When China starts using words like that in an official statement, that's not normal behavior coming from them.
They are much more comfortable these days in using language to signal political discontent and political anger.
It's definitely being strategic. That's them setting the tone that they're not just frustrated, they are ready to push back. And so they did. First, they hit the US energy and agriculture with tariffs. Then they expanded it. Now there's a full-on tariff on all American goods, up to 84% in some cases. That's a huge hit to US exporters. They also started tightening the screws on American companies operating in China. We're talking export restrictions, investigations, and tons of red tape anywhere where they can implement it. So China has basically opened its full playbook on economic retaliation. And look, this isn't just about soybeans and solar panels. Let's talk about the TikTok deal, for example. Yeah, the app that every kid is unfortunately obsessed with. It became a whole political pressure point.
As of today, TikTok is back. I think we would have a joint venture with the people from TikTok. So I have a warm spot in my heart for TikTok.
Remember when Trump wanted to ban it unless it became American-owned? There were talks about some investors coming together. Meanwhile, China would still own a portion of it. And it all sounded peachy, until suddenly, Beijing just shut the whole thing down.
The president seems optimistic, saying he's working with multiple bidders.
Do you think there's going to be a deal on TikTok?
There could be. We're dealing with 4 different groups, and a lot of people want it.
According to the New York Times, it was because of these tariffs. China was like, you hike tariffs, we tank your TikTok deal. That was just being smart and using leverage. And that's where China's real strategy kicks in. They're not just reacting, they're planning, and they're throwing their full economic weight behind the strategy.
Quarters, and we had a deal pretty much with TikTok. Not a deal, but pretty close. And then China changed the deal because of tariffs.
Beijing uses a multi-pronged economic coercion playbook, and they're deploying the entire kit against the United States.
Not sure if anyone followed when Trump floated the idea of starting a sovereign wealth fund.
It's a very exciting event. We're going to have a sovereign wealth fund, which we've never had. I think in a short period of time, we'd have one of the biggest funds.
It's really just a big government investment fund that could buy stocks and build wealth. Well, it never happened. And that's because the US doesn't have the money lying around that lets you build that from scratch. When you're running $1 trillion deficit, it's kind of hard to start investing like Warren Buffett. But China already has one. As a matter of fact, it is one of the biggest in the world.
They basically have the potential for unlimited intervention in the market.
That's how they funded Alibaba into a 200 billion Amazon competitor. That's how they keep their economy from totally melting down when stuff like trade war happens.
They have intervened in the stock market in the past to keep prices from falling, and they can certainly do so again.
When Chinese markets started tanking earlier this year, the sovereign fund swooped in and bought stocks, pumped cash, and as a result, markets stabilized. Their central bank also joined, handing out loans, all to keep the momentum going. That is what coordinated economic power looks like. It's not reactive, it's proactive. And that's the part that people often miss. For all the tough talk from the Trump crowd about standing up to China, the irony is that China's the one that's now framing itself as a steady hand on the global stage.
Kind of benefits from how the global economic order works right now. If many economies are in trouble, then that's not going to be good for China. But politically, rhetorically, Beijing likely sees an opening.
China is using this crisis to portray itself as a global force in terms of trade, but also a much more reliable partner than the United States.
In public statements, China's basically pitching itself as a more reliable partner than the US. And let's not forget how they're sidestepping the whole tariff mess to begin with. Chinese companies started moving their production to places like Cambodia. Today, more than half of Cambodia's factories are Chinese owned. And guess who's now running a giant trade deficit with Cambodia? The US. China's adapting fast. They're running trade surpluses with 120 plus countries, including Canada.
China has more options than the United States. If their exports shrink a little bit, they can partially offset that by increasing domestic demand through more government expenditures, tax cuts, other kinds of policies that are readily available. The United States, on the other hand, does not have so many options because a lot of the things we buy from China, we can't get anywhere else.
If the US loses access to cheap Chinese goods, there's no easy replacement. Prices go up, shelves possibly go empty, and good luck explaining that to your country and your voters. So here's a hard truth. China has more options. If exports dip, they crank up domestic spending. They hand out tax breaks. They move production to friendlier countries. They have options. The US doesn't have that kind of flexibility right now, not when its politics are this gridlocked. And all of it is happening at the same time that Donald Trump is pulling out on trade deals and it's on its neighbors and picking fights with NATO. He's fighting this trade deficit at the same time with everybody. Meanwhile, China's on stage in Munich, sounding like the model UN delegate of the year, making statements like equal treatment, multilateralism, mutual benefit. It's really just smart PR, and it's working. They're betting that while the US burns bridges, they can build new ones. Now, we all know this isn't some utopia. Let's not kid ourselves. China has its own mess. Crackdowns in Hong Kong, pressure on Taiwan, disputed waters, and a long list of human rights violations. This is two powerful countries, both throwing punches. Meanwhile, both are deeply flawed. But here's the scary part. China can take the hits, politically, economically, even socially. Their leaders don't have to worry about polls. They're not losing sleep over approval ratings. They just don't face elections. They hunker down and wait. And if this trade war keeps spinning out of control, the pain isn't just going to hit the US and China. It's going to be a bad ripple effect everywhere, to Europe, to Canada, to pretty much everywhere. We are already witnessing some of these effects as GM has already started temporarily halting production. It laid off over 500 workers just yesterday in Ingersoll.
A major blow to Canada's auto sector as the union representing approximately 1,200 General Motors workers says the company will temporarily shut down and reduce production at its assembly plant in Ingersoll, Ontario.
And about 200 will be laid off in an all-electric plant in Detroit as it adjusts production. So this is all affecting workers both in Canada and the US. This whole turmoil isn't just about who sells more t-shirts. It's about who sets the rules, who writes a script for how global trade and power actually work in this new global trade economy. So where does that leave us? Here in Canada, we're watching this all unfold from a front row seat. We're a part of the system being reshaped. Currently, US is implementing a 25% tariff on vehicles, steel, and aluminum imported from Canada. Our economy is deeply tied to both China and the US. If the US breaks its supply chain with China, you better believe the stock waves will hit us too, through inflation, shortages, investor anxiety, you name it. If you're into content like this, please hit the subscribe button and turn on notifications. We're breaking this stuff down every week in plain English with no spin, no fluff, and no corporate nonsense. And hey, next time someone tells you trade wars are easy to win, maybe send them this video. Thank you so much for watching.